Give us 30 minutes each week to discover the trends that are shaping the future of retirement with That Annuity Show. We bring you conversations with industry leaders who are revolutionizing financial products, technology, and distribution channels. Now, here's your host, Paul Tyler.
Hi, this is Paul Tyler, and welcome to another episode of That Annuity Show. And this is actually a very special episode because I actually have two returning guests on That Annuity Show. Sheryl Moore. Sheryl, you all need no introduction on our program, and Michele Trogni, who is CEO of Zinnia. And Michele, last time we were sitting across the table with the mic, I was interviewing you. Now you interviewed me, and now I work for Zinnia, and just having a great time under Michele's leadership. So, Michele, welcome.
Thank you very much. We couldn't be happier that you're part of the Zinnia organization now, Paul.
Yeah, well, thank you. And Sheryl, okay, this is I think I was looking back, the fifth time you've been on our show. Thank you again for coming back here. Got to ask you, we're heading into a new year. We've got a new administration. We try to stay away from politics, but it's kind of hard to avoid them. Interesting time. New, it's not clear if we'll have new or much turnover at the Federal Reserve. May have some new monetary policy. What's up? What does this mean for the annuity landscape?
Well, I'll tell you, Paul, annuity sales are going off the rails. I mean, it's absolutely bananas. Every quarter when we're getting our data in from the insurance companies and evaluating what sales are going to look like, we're constantly shocked at how great we're doing at setting records over previous quarters and previous years. So I would say the annuity sales momentum is definitely going to continue as long as the interest rate environment is like the way it is. But then the other thing that people have on their mind with the new administration is the Department of Labor's fiduciary rule. And I happen to be of the belief that that's going to get squashed as soon as the Republicans come in and take office. So we'll have to see what lies ahead, but I think it's going to be a good time for the annuity business.
Yeah, one question I had actually come in from a journalist was, what'll happen with the Secure Act? Is there a Secure Act Part 3? And if so, why, and kind of what shape do you think it would take?
Yeah, funny because that hadn't occurred to me at all. And then yesterday, somebody commented on one of my posts on LinkedIn to that effect. I honestly don't think people have yet caught up with Secure Act 1.0. There's still a lot of work to be done as it pertains to annuities that are in 401ks or in plan annuities. We only have a few insurance companies that are in that market, and it seems like a really vast opportunity. So I'm looking forward to the industry catching up with the regulation, which very rarely is the case.
Why do you think it is that there are so few companies that are in that 401k space?
Well, you have to keep in mind that ERISA is a very structured framework. It is so very different from anything we've dealt with in the annuity industry before. So insurance companies have to lay this foundation so that they're compliant with ERISA. Okay. And then they have to get to the point where they're developing a product that may work for this entirely new distribution that nobody knows anything about in the insurance business. So it's actually a quite heavy lift, Michele.
Yeah.
Yeah, we've had a couple of guests on here who I'd say are literally building the rails to do that because the accounting is so different that, like, if I have a 401k but I leave a company, what happened to my annuity? How do I get the values for my annuities into the 401k? Who encourages me? Oh, yeah, then the last leg, Sheryl, is who's going to encourage me to actually opt to put money into my annuity as opposed to, the ETFs or the funds?
Yeah, who's going to advocate for that, right?
Yeah.
There's been some talk about making the annuity option the default option for a certain percentage of your allocation. I don't know that that's the best solution because there are going to be people who an annuity is not suitable for them and is not what they desire. But I definitely think that if we thought we had an annuity education conundrum on our hands, with individual retail products, we definitely have an annuity education problem on the in-plan side.
Yeah, 100%, right?
But huge opportunity, because if even 1% of the flows of 401ks went into annuities, it would blow Sheryl's report out of the water.
Yeah. That's for certain. I mean, I don't remember the stats on it just because I've got a million stats going on in my head on annuity sales all the time, but there's trillions of dollars that are going to need to transition from a deferral stage to an income stage. And so I think it's really exciting when you think about annuities being included in these products, but we're still a very long way from adoption of annuity options in 401ks.
Yeah, you'd think that the industry would be investing in it together, right? It seems like one of the only ways that you're going to get that, kind of standardized approach so that you could see that explosive growth, right?
Yeah. Michelle, I'll tell you, you said something that really hit a nerve for me. We are infamously very terrible at working together as an industry. There are a couple of exceptions. I would say, NAFA has been integral in defending the annuity industry. That's certainly an exception. But, there have been so many other opportunities, Michelle, where the industry should come together and, work on the communication issue with annuity education or work on technology. And we just failed to do so.
Yeah, it's a shame. Like, I think financial services was like that as well for a long time, right? One of the things that really was a massive turning point for financial services was, in the financial crisis, right? When everybody faced a kind of existential crisis altogether, then they saw that the cost of production had to just diminish rapidly if people were going to be able to compete, right? And in some ways, that never really happened to the to the life and annuities industry. As far as, like, at least an outsider, I still call myself an outsider, trying to be an insider when it comes to infrastructure. But it always surprises me that people still haven't kind of in banking. If you ask people if they're building core infrastructure that everybody else has to build, nobody's doing that anymore, right? They're kind of like, listen, we're good at, capital management. We're good at, regulatory engagement. We're good at balance sheet management. We're not good at building core infrastructure that everybody else has to build, right? And, I think when people kind of get to the point where they think about what really differentiates them as a manufacturer or as a distributor, then that's when I think that people will start thinking about, can we build real infrastructure across the industry that can enable growth overall, right? And isn't something that every individual has to build. Because as we talked about just a little bit earlier, when everybody builds it and you have to connect the dots across the entire infrastructure, by the time it gets to the consumer, the experience is pretty awful, right? When I talk to people and I try and explain to folks that, I know well, like what I'm building technology for right now. And I mentioned the word life insurance or an annuity, and most of them freeze, right? Because they don't understand the product, okay? They don't really understand what it does for them. And even if they understand vaguely what it does for them, they can't see or feel it in the right place, right? So they say, when I get my wealth statement or my, bank statement, I can't see what my annuity is worth. I can't see, how much in coverage I've got of life insurance. And so they don't trust it.
Yeah. Well, we certainly don't make it easy for consumers. And I would say that that starts with just an awareness of what are these products and what do they do. I mean, for goodness sake, I spoke with my mother-in-law recently and asked her if she had life insurance. And she said, I'm not anywhere near dying. Why would I buy that?
I know, it's crazy, right? We were talking about this. We had a dinner before Christmas with some super high profile journalists, right? And they were talking about their kids, right? And they were, it was really interesting. They were all horrified that they didn't understand the basics of what life insurance gave them, as you say, when they should buy it, right? What type of insurance they should buy. And, the word annuities, like they were all just like, what's an annuity? How would it work for us? When no idea at all. So you do a lot of work in education, right? How do you think we can take that forward?
Well, that's a great question, Michelle. And I would say that when I'm looking at the insurance industry as a whole, I see that we have really failed at the communication to consumers because of the distribution method that we use for life insurance and annuities. We've gotten to the point where independent insurance agents account for a vast majority of sales. And in that distribution model, the insurance company considers their role as a product manufacturer, not a marketer or sales orientation at all, because that's the responsibility of the third-party marketing firm. So we don't see insurance companies that sell index annuities advertising during the Super Bowl, or you don't hear them on the radio. Instead, you're hearing from insurance agents or marketing firms, and sometimes they have legitimacy issues just because they stand to make money off the sale of these products.
Right, and specific products, right, versus others. So that kind of, I think it's a massive opportunity, right, for us. Yeah, because the way I look at it is we want the industry to grow. Right, we want more people to get the coverage they need, the kind of benefits they deserve, right? And I always think about this: if the consumer gets a great experience, then everybody in the value chain wins.
Yeah.
Right.
Yeah.
And the more knowledgeable, I'm still trying to understand all these products, right? I spend a lot of time trying to, right? But they feel like they've been overcomplicated as well. Do you agree with that, or Yeah,
I do agree with that. And again, independent agent distribution is largely responsible for that. I mean, when I started my company 20 years ago, we had over 350 different marketing organizations operating in the life insurance and annuity business. And everyone wants something special to recruit agents to. And so the insurance companies say, okay, you don't like annual point to point, let me give you monthly averaging because the rates are better on that. Or you don't want to use the S&P 500, you want something with a higher participation rate. So here's XYZ exotic index. We absolutely have complicated these products. And I would say to our own detriment, largely because distributors want to have something unique and different.
Yeah, I think that's right. And it's interesting because we work with a lot of, of the big wealth firms now, the wirehouses. And they've also, even the IMOs that we work with, the big ones, have started to understand that they are killing their own increase in production by not having standardization, right? We have some big distributors, and they are delighted when they see that, like, they can get 3 or 4 different products distributed exactly the same way, right? Because they say from both an agent and a consumer point of view, people are overwhelmed with that, with like all those different nuances, right? And at the end of the day, they just want to know what their coverage is, what they have to do to get the benefit out of it at the right time, right? And what should happen when they need that benefit in the future.
Well, the interesting thing, Michelle, is that I have thousands of annuities that people can choose from. And the typical agent sells exactly 3 different annuities based on the consumer and their needs.
Yeah, I can imagine that, right?
Well, it's interesting. Our business is really been defined by differentiation. Sheryl, do you have the old policy, the new one, right? That's the hackneyed insurance sale. Now, Michelle raises a really interesting, point in terms of consolidation trends. Now, one perspective could say, well, we're going to have, now we're really going to fundamentally see change in distribution. It could be, we've got 4 or 5 large companies now, but guess what? New ones will spring up in its place. Do you think the consolidation will fundamentally change? Because Michelle, you're right. If I had to start to pay back my debt to whoever lent me the money to buy these IMOs, I've got to get efficiency. And the only way I get efficiency is if I standardize. Do you think this will change the paradigm where I'm not selling the new, but I'm selling the old a little more efficiently?
That's a great question, Paul. And I would say, looking at the distributors and the M&A that they've experienced, what I'm hearing is it really depends on the distributor. There are some who have not focused on achieving economies of scale yet at all. And there are others that have it down to a science.
I think Cheryl's right. And it's interesting. I was at a conference in November, I think it was, in LA. And I was around a table with a number of big RIA firms, right? The guy kind of leading the conversation asked, so what's your biggest issue that each one of you have got? And I think 8 of the 10 firms sitting at the table all said technology. We're overwhelmed with it. We've got all these different tools, right? None of them talk to each other. Okay, the data doesn't seem to be the same, right? Because it's cut at different times, or it hasn't caught up with X, Y, or Z, or it's representing something slightly different, and it's overwhelming. So we don't sell. We were talking about retirement products, and we don't sell as many because it's easier to sell something that's simpler.
Well, and we've seen a lot of money coming into the technology space as it relates to annuities in particular.
Yeah.
Just because there are so many startups that are like, hey, I have this great idea. And many of them have been focused on trying to get in front of RIAs with annuities by implementing annuities into their software program that also shows other products that they can sell to their client based on their needs. I have seen a lot of them that compete with each other. And I don't know what the motivation is from an insurance company standpoint to do business with one instead of the other. But it seems so fragmented, and the insurance industry and our distributors are even more fragmented. We need to scale if we're going to grow this market.
100%. I could not agree with that more. I think that, when I look at InsurTech, and I think I said before, my background is more fintech than InsurTech, right? The first wave of fintech that we saw, I was a CIO at the time, buying from the industry. People came with all these point solutions, right? But they only did a tiny bit of the process, right? And when they only do a tiny bit of the process, you spend more time integrating all of those things than you do getting the benefit out of them, right? The second wave of fintech was where people tackled things from initiation to completion, right? And that was the time in which we started to, both from a banking point of view and then when I went to market, see real traction, right? Because if you can make the process better from origination, when you build the product, through distribution, through administration, through claim, right? And you can take a lot of that, those steps out of the process, then people can rely on the data and they can do the things that they can really add the value with. Right. And that's what I think will solve the scale problem, but who knows?
I still remember, Paul, when you were at F&G and you guys decided you were going to do an annuity special and offer this uber attractive rate on your MIGA products. But you were going to force agents to use the e-app and do straight through processing.
Oh, I was right there. By the way, I had the first actually iPad app, Sheryl, to do that at the same time. Yeah.
Did you build
Yes.
No. Yeah.
Well, I bought one of them using that process just because I wanted to go through it and see what the user experience was like. And it knocked my socks off. I mean, it was revolutionary at the time.
Yeah.
Yeah,
you should see what Paul's doing now. He's, with education. AI is really changing how you can distribute education for agents, for consumers. It's incredible, right?
Yeah, I think this is going to open up a whole new wave of possibilities, Sheryl, in this business. Kind of going back to the RAs. I mean, if you were, giving us your 3-point strategy to crack the RIA space, what is it? Would you lead with technology? Was it product? Is it something else?
Well, I'm going to say let's define RIA, Paul, because I have a lot of RIAs that sell annuities but take a commission on the sale. So they're a hybrid RIA, where what I would think of as a traditional RIA would be receiving assets under management fees or charging hourly rates. And I would say that is an entirely new distribution for our business that people have just started tapping into. I do think absolutely the key to getting those folks' attention is technology. We are not even close to being there yet.
Interesting.
Yeah.
Interesting. All right. Well, that would confirm what we think we've heard.
Yeah, exactly.
Yeah.
Okay.
So I guess first of all, thanks for your time. We're getting kind of close to our time. Sheryl, predictions. This is the first part of the year. Promise we won't hold you to them. Oh yeah, we'll. It'll be a reason to get you back and see where you go. I mean, what do you think the big events are going to be this year?
That's a good question. I think that the fiduciary rule is going to get overturned. I think that's a big, huge thing because it's been looming over our heads for so many years now. I think that we are going to see more companies getting into the in-plan annuity space and really perfecting their product and their process so that we start to hear more about someone entering the in-plan space and doing a good job at it. I think that we're going to continue to see record sales of these products, and annuity education is going to be delivered through technological means in a way that we have never seen.
I love those predictions. Yeah. I think that's really great. There's a lot of talk worldwide about longevity right now. Do you think that we're going to be able to kind of get people financial longevity? Do you think we're going to be able to tie these retirement products to the longevity discussions that are going on before the end of this year?
Yeah, I do think that a ton of focus has been put on annuities specifically for that reason, Michelle, because they provide the purchaser an income that they cannot outlive. Yeah. So even if I'm 150 years old, I'm getting a paycheck every month for the rest of my life. And I think that's one of the big reasons why we're going to see annuity sales continue to have great momentum. It's just because there are so many boomers that are turning 65 years old and concerned about running out of money in retirement.
Exactly. Never mind all the millennials that haven't earned enough as well yet, right? I think that's, I think that's what our industry needs to bet on, right? That we can, that longevity is going to be a huge driver of growth, right? And that, between us with data, technology, education, we're going to get people way more comfortable with that, with these products as part of that future.
Well, I'll be watching, Michelle. I'm really eager to see how Zinnia is going to disrupt.
Let's see. We're going to try our very best, Sheryl.
Yeah. Hey, well, listen, Sheryl, thanks so much. I think everybody knows where to find you on LinkedIn, and very easy. If you're not following Sheryl, you absolutely have to. Michelle, thank you for joining us.
Certainly going to be following Sheryl after this. I'm very interested in hearing more.
Right, and we want to thank all our listeners. Make sure to share our show, leave reviews, and be sure and join us, most importantly, next week for another great episode of That Annuity Show. Thanks.
Thank you.
Thank you, Sheryl. Thanks, Paul.
Nassau Financial Group is always working harder to be your carrier of choice. We build products that help protect people's savings and are dedicated to providing you with best-in-class service. We seek to keep things simple and have your back in the years to come. Nassau is headquartered in Hartford, Connecticut. Learn more at nfg.com.
Zinnia, an Eldridge Industries business, simplifies insurance. It delivers comprehensive solutions for the industry's most critical needs and creates the modern rails of the insurance industry. To learn more about Zinnia, please visit zinnia.com.